Well, good afternoon. Good afternoon and welcome to another of our Wednesday webinar series. This is our third episode of Managing Your Business Through the Pandemic Crisis. I'm Kelly Bearden. I'm the director of the California State University Bakersfield Small Business Development Center, or SBDC, and we are live from our SBDC office in downtown Bakersfield. And I am the only one here in the office, so I am safe distancing. We will continue every Wednesday, as we have the past couple, looking at resources available to small businesses impacted by the pandemic. We'll be looking at the most important topics of the week or the day, and we will be likely adding additional webinars on related topics. So please, when we're done, use our survey to give us some feedback on what you would like to hear. We will be here meeting your business needs, God willing. And as the gentle chimes of the church bells from the church across the street ring, we're going to talk today about the very latest on the economic disaster lending program, stimulus programs, and a wide range of assistance that's available to our small businesses. The information I'm going to present today comes from a variety of sources. Most of them are resource partners, such as the SBA or the state, national authors and small business advocates. We also have our pulse on many small business entities. And we have others that are out there, such as the Wall Street journals that we participate and read with. A lot of the other things that are going on, we're going to discuss mainly the funding options that we have, but we are sensitive to the other needs that are going on with small businesses, and we'll try to allocate a little bit of time to some of the other programs, being HR and other. You'll get my opinion on a lot of things disaster related and business related through this crisis. And it's a fluid and dynamic situation, as we all know, that changes literally by the minute. These are indeed challenging times, and it's truly business as unusual. So let's get going. So, as we move along, I want to show you, first of all, our SBDC location. And we're located in the Central California region. And in the Central California region, what we have is we have a number of centers. And the centers throughout the region, Central California region, are in Modesto, Fresno, Bakersfield, San Luis Obispo, and also in Monterey, Salinas area. So our role in working with individuals in this is that we're going to help you with SBA disaster and other loan information. We further plan to help you evaluate your loan options, and those are going to be coming down the pipe. It's going to be important with the loan options that are coming up through the various programs that are available. We're going to help you with your assumptions, and this is really an important aspect that we need to get really working on within our businesses. We need to work on the assumptions and the sales based on our current situations. So we're going to be able to try to assume what our sales are going to be through this crisis, but we're also going to look at our expenses to try to manage our cash flow most effectively. We'll eventually get to some sales recovery and marketing ideas as we kind of move on past this, hopefully as soon as possible, and any social media and HR. But we'll be there also to help you evaluate opportunities through this disaster. So before we do a recap of the last couple of webinars, what I'm going to do is I'm going to launch a poll. It's a very simple poll. Appreciate your feedback on this. And the poll question is going to be, have you applied for the economic injury disaster loan? As you know, we've talked about this the last two webinars. This will be our third on this topic. And it's been kind of the first step that we've been going through to try to see about what is going to be out there. So as the votes are coming in, I'll give you another maybe 5 or 6 seconds or so to actually go on. And okay, so going to end the poll and I'm going to give you a few more minutes because everybody's still chiming in. I want to get as big of a sample as possible. And what we're finding is that, here we go. ending the poll right. Last chance. 53% voted. That's a pretty good turnout. We're in the poll. And let's share the results with you. And what we see is that the majority of you have not filed, 44%. The remaining plan to apply is 29%, and 27 have already applied. So thank you for providing that information. It'll allow me to spend a little bit more time assisting those 30% who want to still continue to apply through this process. So stop sharing this poll and we'll move on. Okay, so let's do a little recap of what has been happening if you've missed the last two webinars. A little recap has been, our initial focus has been on that disaster application. And as many of you know, we'll talk about how it's changed rapidly. And it changed significantly. The most significant factor of it changing was last week. And that was when actually the stimulus package was passed, because it provided more resources into the disaster process. And we'll talk about that. So last week we had the upcoming stimulus, and fortunately, I think we hit on a number of the items that were in there. Thank you for all the sources out there for releasing information and to kind of trying to keep your businesses kind of up to date on what we can do. We talked about, and we're going to do this again today, trying to defer as many as your expenses and your costs that you have possible. So we're going to continue to look at deferring your expenses. And we're going to look a little bit on cash flow, because that is such a crucial aspect that we have moving forward. We're going to look to the unique and creative. This is going to be an area that we're going to focus on more as the weeks go on. But we're going to really look at the unique and creative aspects that businesses are starting to do to try to weather. And look at the more opportunities that are available. And of course, first and foremost, we're going to try to stay safe and protect our family, friends, and our workers. So that's kind of where we've been. For those of you that have been on the other two, I like to do what's new today. And today happens to be April 1st. So happy April Fool's Day to you. I don't really think many of us really thought this was going to be our April Fool's Day today. I was thinking back just 5 weeks ago, I was at a conference, a economics summit in the community of Ridgecrest. And they have about 250 people that annually show up the last week of February and talk about the economic vitality of the area and what's expected. And they have an economist to present. And the economist 5 weeks ago was, like most of us, unsure of which this was going to go in the path. And when I think back, it's almost mind-boggling that in a short 5-week period that we could have, within the month, actually could have a stimulus package for $2 trillion passed to try to help our small businesses, our bigger businesses, and our individuals and citizens across the country. So for that reason, and not too many more, happy April Fool's Day. Our final guidelines are still coming soon on what I call the 3P. A lot of people call it the PPP, the Payroll Protection Plan, that we'll discuss. SBA Disaster Platform, EIDL or EIDL, has been streamlined, and we'll talk a little bit about that, the streamlining aspect. The loan is now out for the PPP, and applications start on Friday. Okay, because we've been hitting a lot of acronyms, and your acronyms for AFD, which is April Fool's Day. We're going to start with EIDL, EIDL, which is the Economic Injury Disaster Loan. And it's really, I really apologize, it's gotten this sad that I have to have kind of a sheet of acronyms. But also we have, in the past, talked about EIDL instead of EIDL. We've called it the SBA Disaster Loan Program, and we've called it a number of other things. So those are the same. We're talking now about the PPP, also known as the Payroll Protection Program, which came out of the CARES Act that was signed into law last week, is that we were calling last week the Stimulus SBA Loan Program that was likely coming, and here it is. I prefer to call it the 3P just because it's quicker. For those of you that don't know the SBDC acronym, there it is, Small Business Development Center. And then, of course, the acronym for where's the funds? So let's start first with the Payroll Protection Program, the 3P, the PPP, and a little information for borrowers. And we did get a nice little dusting of information last night, got a lot of information yesterday afternoon. And so what we're going to do is we're going to continue to provide that information to you. But really, please remember that the final regulations are not going to be available till Friday. There are some details that are missing as the Treasury and SBA continue to work with lenders and to work with their field representatives and to work with all of us on some of the ways to kind of keep these on the up and up. So final regulations are not due Friday. And I really, with this, I want to try to remind you to remain calm. I know there's a lot of anxiety going on out there. And what we can do is we have time to do this. We're going to work on the immediate bills right now and revenue and forecasting that later on. But there's going to be plenty of money in this program. There's $349 billion right now. So a little relaxation, and there's some work to do on your part. And we'll get into that also. But really a little bit of calm before the storm, because the applications, you cannot submit one until Friday. So, and then it might not even be in your best interest to submit it on Friday. Talk about that later. So the interesting thing on this is all loan terms will be the same. The loan amounts in here, as we recall, the PPP, the Paycheck Protection Program, has a component that will actually turn into a loan forgiveness or actually grant process. That's important to remember because it's going to cover the payroll cost, your mortgage interest, your rent, your utilities over an 8-week period of time. So that's one thing to consider from a strategic standpoint for a business owner. Over that 8-week period of time, what's going to be most beneficial to you? Now, if you've been on the last few, you've heard that I no longer have a crystal ball. I like to tell people this week that I actually pawned it at a pawn shop in Reno a few decades ago, but I didn't really have one to begin with. So, but what you're going to do is, since we don't have a crystal ball, you're going to come up with your best guess estimates at this point in time. Looking at the economy as it moves forward into April, you know, I'm an amateur economist like most of us out there, but April is not projected to be a very good month for us. It's going to be really maybe our most difficult month of this whole crisis. And as that happens, and as we get into more unsettling times, people are going to probably be less willing to go to your business if they are open now. So kind of using that 8-week period is something that you're going to really want to try to forecast and strategically think about. So it might be in your best interest to do this thought process and to consider these things before getting that application in. So calm, we've got time. Let's try to figure out how we can best make the most of this opportunity. It could be the only one that comes available. One of the things that I think I will talk about a little bit later, but I'm going to mention it now, is in this process, there is an analysis part that is very important. And that is that 75% of the amount forgiven is going to most likely have to be payroll cost. So if you're looking at a very high interest rate or a high rent payment, or your utilities are abnormally high and your payroll's lower, you might not be able to maximize that entire amount. So the first thing that you're going to want to forecast moving forward is try to get an estimate of what your payroll costs are going to be. And when we have the final rules, it'll make it a lot easier. Their payroll individuals are capped at 100,000, and these loan payments are going to be deferred for 6 months. So again, this doesn't start till April 3rd, and that's going to be only open for small businesses and sole proprietors. If you are an independent contractor or self-employed individual, and oftentimes a self-employed individual is somebody who is in business for themselves but has no employees, then they need to wait until April 10th, 2020. And you know, the key thing is that with the disaster loan program, we talked about, you know, SBA is going to provide the direct loans for that. The direct funding is coming from SBA. But now there are over 1,800 chartered lenders who are going to be given the opportunity to actually go in and make these loans at this time. So it's really important to try to get as much information as we can have before we go into this process. So what do I need to do to apply? And what you need to do to apply is you need to complete the application. It is on the internet now, and there are some sources, some links that I could possibly give you at the end, and find that and actually download it and look at it. It's a fairly simple process. It's going to be pretty easy. The underwriting is going to be more simple, but it's going to be done by a lender. And hopefully it's the lender that you work with. That's what we like to actually encourage small business owners to do, is to first contact your current bank and see if they're going to participate. Some of the, at least rumor on the street, I'll call it right now, is that not all lenders are going to participate at this time. So it's an opportunity for you to find a lender. And there's going to be probably, I'm sure, plenty of them out there. They're going to be busy. They're already been swamped. Everybody in this arena right now is fielding a lot of questions, including yours truly. So SBA is waiving the usual SBA requirement that you try to obtain funds from other sources. So usually, like the disaster loan, if money's available or if you can actually find loan sources from other sources than this process, go ahead and do so. This program is going to be open until June 30th. You know, I say apply quickly because there's a funding cap, but again, the funding cap is $349 billion. And if that doesn't meet the needs, it's possible that Congress will do something after that. So your loan proceeds from this particular deal, what can you use them for? Again, it's going to be payroll cost, including benefits. It's going to be interest on the obligations incurred before February 15th, 2020. And that is going to be a cutoff date that you see in this program quite frequently. And sadly in this is that, at least initially, there are going to be people that kind of get caught in that gray area. And we're going to be looking at ways to resolve, for example, we worked with some clients on some business acquisitions. And quite frankly, I don't know if those businesses were acquired by the new owners after or before February 15th, or how that's going to impact that new owner. So, and it could be go down to how the transaction had happened, but it is hopeful that, that those people will be able to participate in this as well. So there's going to be a number of these situations, oddball situations, as I call them, that come up, and they're going to just have to be handled on a case-by-case basis. So your rent must have been under a lease agreement in force before February 15th as well. So some of you might have had a new lease agreement. You might have moved into a new facility. You might have done a new lease. So those are another kind of set of quirky questions that are going to come up. Utilities, pretty much the same way. February 15th is our date that we're working with. And if there comes unusual situations, my tendency would be to apply and then try to work through that and try to document that the business was up and going, because that is the real true test of this. Was that business operating before February 15th? So some of the key loan terms of that particular loan deal. 0.5% interest rate. That is 1/2 of 1%. It's going to be a short term. It's going to be a 2-year term. And the first 6 months are going to be deferred if you want. You can't make the payment, but it can be deferred. It is notable that the interest, even though it's a very small amount, will accrue on that. And again, that 75% payroll is going to have us doing a lot of calculating, I believe, on exactly, it's going to really become that payroll issue and bringing back people and trying to maximize that benefit and trying to figure out a use for those people and to try to figure out a need. And maybe it's a new task, maybe it's something else. We have several businesses that I've talked to that have already closed. And then we have a percentage-wise of several businesses that are open and trying to work with limited resources and trying to work with generate more revenue from a different source, such as your eateries that On-site eateries are suffering to try to get more takeout and more delivery and more other aspects. So there's a lot of things out there right now. So, and there's a lot of situations how this affects how it affects you differently. It will affect you differently than maybe someone else. So there's really no cookie cutter solution. And remember that, and try to look at your situation, look at your employees and other things. And again, also, we're encouraging people to, if you don't think you need it, to still apply. I know a lot of you out there don't like that. Not a big fan myself, but oftentimes it is needed. It's needed to grow businesses, and it could be needed to keep your business surviving and potentially thriving into the future. So those are some of the key loan provisions. I have kind of a question and answer sheet, and we can go through a few of those. For example, the 8-week period is going to be really key. It's going to be key in all this. And there's a couple of other things, such as you do not personally have to guarantee the loan. So if your question is going to be, do I have to personally guarantee it? Unlike about any other SBA loan I've ever seen, no personal guarantee requirement is necessary. You will need to certify your employees somehow. So, and you will actually need to self-certify a lot of aspects to this, that you are certifying in good faith and pretty much signing off that it would be fraudulent if you did not answer that correctly. So, you know, people I've talked to very briefly, you know, maybe your best source for substantiating your employees, because your employees, the maximum amount of your award is going to be your average number of people. So your average payroll. The example I like to use, of which I don't know if I have a slide to be honest with you or not, is 240,000. So if you paid 240,000 last year, your average payroll is 20,000, and times 2.5% of that is 50,000, which is the maximum amount you can do from a payroll perspective. And then apply the 75% of that, and then you kind of back into what other expenses can be shown. So a lot of this information just available recently, and haven't really even had a chance to get a lot of it on slides yet, but that is kind of the down and dirty. Again, the average monthly payroll for the last 12 months, and there's other conditions for seasonal workers. There's other conditions for if you've been in business in a shorter amount of time. So if you were only in business, say, since the first of the year, it would be January and February, your average balance there, and applying that 2.5% factor. So hope that preempts a couple of questions that you might have had. So another thing that'll probably come up is collateral. And we've talked about collateral in the past, and there is no collateral required in these loans. So essentially what you're doing is you're getting essentially either part of a grant and part of a loan based on the employees that you've paid and your willingness to bring them back. Again, hence the payroll protection program. So what do you need to certify? According to SBA, the rules are that you will need to certify that under current economic uncertainty, it makes the loan necessary for you to support your ongoing operations. The funds will be used to retain employees and workers and maintain payroll or make mortgages, lease, and utility payments. It's not clear in here if you can use it for other purposes, such as marketing. Final regulation should have that. It would be part of a loan part and not part of the amount that's forgiven, though. You will need to provide your lender documentation on the number of full-time employees. Actually, it's full-time equivalent. So if you have 220 hour per week employees, that's one full-time equivalent. And the dollar amount of payroll costs covered. You also have to provide mortgage interest payments. So there will be some documentation that you need. For clients, again, that I have talked to, I have asked them to pull their last 12 months of their employment, their EDD, I believe it's a DE3 quarterly statement. And most of those are filed electronically. these days, but they all are also reports, and you have reports. That is the information you're going to want. It's going to show your total amount of payroll for a given quarter, but it's also going to show the breakdown that you paid each individual employee. One of the provisions that I believe I've seen also is that you cannot pay the employee less than you had before. But again, final rules Friday. Final rules Friday. Other things you might need to certify is, and I am actually reading from the cheat sheet here. So the loan forgiveness will be provided for the sum of the documented payroll costs. Due to likely high subscription, it is anticipated that not more than 25% of the forgiven amount may be for non-payroll costs. That is where we're coming up with the 70%, 75% payroll likely. So essentially, of the amount that's going to be forgiven, 3/4 of that is going to be payroll. And in these documents, it says due to high subscription, and that is going to be pretty much true, and I think in our case. I would at least plan on it being 3/4 of your forgiven amount. Your grant portion of this is going to be payroll. All the information you provide in supporting documents is accurate and true. Knowingly making a false statement to get a loan is punishable by law. So doing what they can to weed out some of the fraudulent aspects of it and some of the other things. And lastly, you need to acknowledge to the lender that the eligible amount using the tax documentation you submitted. You affirm the tax documents are identical that you've submitted to the IRS or to other employment agencies. So please don't give a lender anything that's not been documented in past EDD or IRS filings. Okay. That is some of the information that we have on the PPP out there. So that again is not all the final rules, but that's what I have at this point. It's going to be an interesting process. We're going to get into some discussion on, are you going to want to do the 3P as I call it, or are you going to want to do the idle? And that is going to be something that maybe you need a little more idle information on. Now, some of us have thought maybe idle should be changed to maybe a different acronym, perhaps maybe REV or floor it or gas it. But it is idle, and parts of the process did idle along. Again, remember that this changed significantly when the SBA could do things according to law. When the law was signed in effect last Friday, that changed a lot of characteristics of this program. You heard us talk previously about the disaster program is usually a localized program for communities that are devastated by natural disasters, by hurricanes, tornadoes, earthquakes, etc. And the process really wasn't set up to handle a phenomenal amount of economic injury disaster loans. I am happy to say I was in the platform on Monday morning. It is much easier, quicker process. So for those of you that still want to apply, it is something that, you know, with your contact information, your employer identification number, and a few quick stats like your potentially, if I recall, your revenues over the last 12 months and your cost of sales, a little bit of prep work on that, you can actually input it in 10 to 15 minutes. So a much easier, simpler process. And the key thing that they did this week also is they added banking information. So where in the past, one of the issues with this is really going to be the speed in trying to get it out to our small businesses, trying to get out the stimulus payment to individuals, and trying to get money to where you can operate your business or keep your business afloat in the interim period of time. So this was added in the form of an advance, and it was pretty much, again, the CARES Act that was passed by the House last Friday, signed by the President, and it gave the opportunity for a $10,000 advance on the idle loan. And using this new and improved portal that was available on, I believe it was actually available on Sunday night. I did it on Monday morning. You could gather the information and again, fill it out very quickly with far less documentation that many of you went through previously. So a couple things that I want to talk about on EIDL before we move on is, since many of you, 30% of you still need to apply or want to apply for this, here are some of the characteristics that have happened over that period of time. A lot of documentation early on, not so much now. You heard that. If you started to apply but never completed your application, the good news is the process is a lot better, but you're going to have to go back in and do that. We're starting to hear from people who applied for the EIDL program and were denied. If you are one of those people, the SBA is now reviewing the past EIDL application denials and with an eye toward greater acceptance. So this is because of the CARES Act and because of last Friday, which changed so many aspects of the disaster loan. So SBA is now expects to be able to approve many of the applications that were initially denied. So again, the big changes there, if you've been denied, please be patient. They're looking at actually now being able to go in and to approve that loan that was denied previously. If you've never gone through the process, please continue to do so. And again, there's a box now to check for this $10,000 advance. And you put in your bank account number, your routing information in your bank. And if you're approved for that process, SBA will wire that directly into your account. So that's coming very soon. And the $10,000 is an advance on the disaster loan. So final details will be out Friday, because we're going to be talking about probably now about 4 different or 5 different products that are available, loans and grants that are going to be available, and how they all interact and mesh and work together or work separately are going to be the ones that you people I know are already asking questions about. Okay, so that is it with the EIDL for now. And let's talk a little bit about SBA Bridge Loans. The SBA Bridge Loan is something that's not out yet, but it's another attempt for SBA to get money out quicker and faster to both EIDL and PPP applicants. So keep in mind, this is going to come. This is going to be something we talk about next week. Again, the goal I would think would be, if I'm a business owner, I'm sitting here optimistically, which I have been in the past. I would be sitting here thinking about maybe the end of the month is when I'm going to get this money, and how do I survive until then if my cash is that limited. And we're going to go through some other ways. The SBA Bridge is something we're going to talk about much in the next weeks to come. Also, there's an SBA debt relief program. And this is another program that was created by the CARES Act. And likely this is going to be a program, it's for existing SBA borrowers, only open to SBA borrowers at this time. And the details are not readily available, but it's likely to be either a deferment, an actual payment, or there could actually be some debt forgiveness on these loans. I know we've talked to a lot of people that have gone through their SBA lender and are working on getting a deferral. I would go forward with that deferral. Some of them, people are talking about 3 months, or some are talking 6 months. It's unclear about how this program would work, but I would imagine that if you get a deferral on that and they come back and say, we're going to forgive debt for 3 months on this program, that they would honor that for those that got the deferral. Again, next week, we hope to have Keith Bryce from Mid-State Development Corporation, and Keith can give us a great update on this particular program after we get more details and it becomes available. So this is going to be the question of the day, and I think maybe one of you are thinking this because I am. And EIDL PPP, what's best for me? And that is going to be the question of the day, and actually not of the day, but probably going into next week. And again, it's going to come down to your individual business and your needs. I can say here, okay, do EIDL or do PPP. I will give you some general platform balances. And number one is that when you go into EIDL and you do the new requirement and they ask for your banking information, that is for in advance purposes. Now that could also be, there's also a box you can check for the grant if you only want to apply for the $10,000 grant. There is $10 billion in the CARES Act that is going to go for individuals that request the grant. And I don't have the final rules. It can be, though, for people that don't qualify for either of the other two programs. And it can be those that just elect to select that program. Final regulations on Friday hopefully are coming on all this stuff. But right now, what we have is we have $10,000 that can be advanced through EIDL. We also have maybe the grant option that you check the grant box and it goes that way. So we'll see. We talked about the EIDL process being much easier and that the banking information is actually there. So, and credit is not available elsewhere. The key thing here to remember is that with EIDL right now, the grant program through SBA Disaster that many of you have applied for, what we've learned is that there is right now $7 or $8 billion in it. In the PPP, there's $349 billion. Okay. You know, that's what, maybe 50 times more money in the PPP. So keep that in mind. The PPP is going to be more funding, at least available now. That is possible to change, subject to Congress. But I think everybody's goal and objective to see what they can do with the PPP, the 3P program, and try to get money out in those areas. Many of you know about the stimulus check provision and expect that in the next 3 weeks. When you're starting to do your cash flow forecast, if you're self-employed or an independent contractor or even self-employed, factor that into your cash flow because that's going to be money that's made available to your household in most cases. So they will distribute those automatically. No action is going to be required by you. There's some seniors, such as my 87-year-old mother, hi mom, and others who typically don't file tax returns will need to submit a simple tax return to receive the economic impact payment. So there's going to be a platform available to where you can go if you didn't file a tax return in 2018 or 2019 because you were not required by law. And if you did not file your 2018 or 2019 tax return, you're strongly encouraged to do it as quickly as possible to get this money as quickly then as possible as well. But if you didn't file for 2018 or 19, then you're not going to receive the payment. And again, remember that's $1,200 per individual, $500 per child. So other funding issues that we've talked about in our webinar series are loan deferments. So loan deferments are still something that you should be looking into. If you have mortgages, you should talk to people about it. I know I've received several emails from individuals who are frustrated at some of the major banks and their deferment programs that are very impossible to try to find or access. Again, I would try to remain patient. And for those that are concerned about their credit scores being impacted, remember the first damage that hits your credit score is going to be a late payment of 30 days. So if you have a mortgage payment coming due on the 5th of April, really in the past, credit reporting wasn't done until May 5th came along, and that was 30 days late. And that would be the first negative. There's going to be worse things in life than having a 30-day late in April of 2020 on your credit report. So keep that in mind, is that a credit report doesn't show up as a negative or bad aspect until it is 30 days late. And I would hope that even though you could incur potentially a mortgage penalty payment, If you're a first-time offender, I think you can get rid of that. And also, I've got to think that the big banks and other banks too are going to show incredible flexibility because everybody knows what's going on right now. There's other lending programs, and we're going to probably get into that more. We still need to focus on the 3P that's coming out Friday, and EIDL for those of you who haven't applied. There's some state funding options, particularly the iBank, and there's some state guaranteed lenders. I would stick with the federal lenders for now. We'll look at alternative funding when that becomes an issue, but there are going to be other funding options that are available. Again, not to get into deferments too much, but there we go. When you start looking at deferments, I think one thing to do is, and I want you to look at all your obligations. So that's the first thing you really need to do is you really need to identify all your bills. If you have a budget, that's great. If you don't, now is a good time to start budgeting. So make calls and send emails to these individuals and to organizations and contact them to explain your situation. Understand your vendor situation. I think this is a really good point that I picked up from a newsletter because, maybe your landlord isn't in a position to defer your rent and maybe he's impacted as well, or maybe not. Maybe he's totally able to do that, but try to look at your vendor who could be going through the same problems you're going through. And on the same point, vendors, look at your customers. There are customers out there you do not want to lose because of this crisis. You know me, I always insist that you try to be courteous. Your vendor or your customers out there could be in the same situations as I mentioned. Negotiation, you don't have to take no for an answer. It's important to negotiate and also start with, look at your list and prioritize your list on what could be some of the most important aspects of that. Okay, I'm a big guy on cash flow, and I cannot stress this enough. I hate to use the word stress at a time like this, but I cannot stress attempts to manage and understand your cash flow. So, whereas I didn't have the opportunity to get to this, I can do it verbally. What I'd really like you to do is to really to start working on your cash flow forecast, and to do that is to first start with some assumptions. And we'll talk about the assumptions in just a second, but start with revenues and closely estimate as conservative as possible that you can. This can be done on a separate sheet of paper. It can be handwritten. It can be done in Word. It can be done in a lot of different aspects. Just start working on some assumptions. You can add, if you got one of our spreadsheets last week, one of our Excel spreadsheets that we'll make available to those that need it or want it today, you can add another sheet at the bottom and you can put your assumptions right there and have it in the same document. But start with revenues and understand things are going to change, and things are going to change rapidly, as we've learned. Your March sales are going to be better than your April sales for most of you out there. With an idea of what is going to be deferred, start estimating your expenses. So if you were proactive and have started to try to limit or try to defer some of your costs, then kind of make a note of those and start estimating what those are. And you're going to want to do that on a monthly basis. And again, understand it's changing frequently, likely. So here is my cash flow forecast that I kind of like and kind of use. Again, I know it's 2021 and I'm looking forward to all of us doing cash flow forecasting next year. But I can send you this document that'll have the 20, 21, and 22 as sheets available at the bottom, and it is a cash flow forecast. So how this might work is go up to April, it's the first day of the month, look at your bank statement or go online and get your bank statement and look at how much cash you have. First and foremost, let's find out how much cash you have today that's available for you in your business. Then start estimating, and this is where you go off your separate assumption sheet. Start estimating what your cash sales would be. And maybe it's going to be your best guess for today. And it's going to probably change a few times during the month, and that's okay. Because what you're going to want to know is your cash position down here at the bottom at the end of the month, at the end of April. So start with your cash on hand and then put in your cash sales. If you have any sales on credit, the important thing is here is when are you going to get cash for those? So if I make a credit sale and my terms are net 60 days, I might not get paid for that until June, 60 days later. And that's when I'm going to get my cash. And all we're concerned about in here is cash. When am I going to get my cash? So here's an area for loans and injection. So when maybe you get one of the grants, maybe you get an advancement of disaster loan monies. So put that in there, and it could even be some other monies that become available, money that you take out of your personal savings and put into the business. So then start looking at cash you're going to pay out. Now, these aren't expenses that you incur this month. So if you buy something under the same thing, the terms under purchasing, you might buy $10,000 worth of purchases, but you have net 60 to pay for them, so you're going to pay for them in June. And that's going to be an expenditure that's going to come due in June. So then look at most of your expenditures through here and estimate what they're going to be, and then get your cash position at the end of the month. Okay, I know many of you have had employees, like which employee do I start with? How do I decide how employ? You know, it's a very difficult situation, and it's going to be an individual case-by-case basis. What I've been telling my clients is that, first of all, no matter how important that client or that employee is in your business, to first and foremost ask them if they feel safe working. If it's someone you value and you want back, you know, maybe somebody is not wanting to come back. And I know many situations where that's happening, at least at this time, until this crisis is a little bit more manageable and a little bit more under control. So first and foremost, make sure they want to come back. Second, make sure they're healthy, and make sure that there's some form of, you know, I don't think it's, I mean, make sure that there's good health in their family and their immediate surroundings as well before you bring them back. So again, the client's going to be the first, the client's employee is going to be the first person. So then start bringing back people that are job crucial or job sensitive based on the assumptions that you've already done of what your sales are going to be, how many people you're going to have, any new things creatively you'd like to do or add. These are employees that, based on the final requirements that come out on Friday, are people that are basically going to be paid by the government these next 8 weeks or for an 8-week period of time. So try to maximize their benefit during that 8-week period of time. If they've been laid off for a few weeks, maybe it's most beneficial to bring them back the 1st of May and then run it through the 8-week period that ends June 30th when the 3P program ends. So be creative, and oftentimes I think that decision is going to be out of your hands when you've either laid off an employee or bring them back. You know, we've really focused on the first two on a lot of the funding and programs that are more geared toward getting capital in your hand and to alleviate the cash situation. EDD has some great resources. There's great resources from the state of California, from GoBiz. I mentioned EDD, but there are other programs that when you're talking about your employees and trying to do right by them, there's other things as the illness becomes more pervasive and more insistent in our communities, that we really need to look at some of the family leave laws and some of the other programs that are out there. So there is a new federal family leave law. Honestly, I have not studied it. I want to do more on this, and maybe this could be one of the many webinars that we do, the additional webinars that we're going to be adding in addition to being here next Wednesday, God willing. So here are some of the things: the California Paid Leave Act and the California Family and Medical. These are all state programs right here. The Medical Leave Act and the California Family Rights Acts, and they show the employer size that they affect. Please, if you have clients that, I keep saying clients, it's their employees. If you have employees that would benefit from any of these programs, be proactive and do what you can to help those employees that value so much to you. I mean, I heard you all the last year and a half, couldn't find great employees, couldn't find any employees. And we're essentially going from 0 to 60 rather than 0 to 60. So that was 60 to 0, not 0 to 60. Again, some of the other state resources that are available. Another really good one is laborca.gov, Corona 2019. Look for those resources. And we'll try to do a better job of covering these once we get back this immediate cash crunch. So a slide from last time, be creative. It is truly business as usual, and start brainstorming ways to stay as relevant and as effective as you can. And this is even more so now, because now we have the PPP and we have ways to utilize employees for 8 weeks. There's a lot of things that can be done in that 8-week period. We're getting into that next week, and we're going to talk about a lot of the ways that we're seeing people do. I have success stories from around the country that we do not have time to get into today, because I want to answer some of your questions. But again, I'm going to keep saying opportunity. I don't mean to sound opportunistic during a time of such crisis, but opportunity is there. And to consider your shorter, rather than just always your shorter term, stick on the shorter term, but also look at some of the longer term that are out there. These other ideas are retreaded from last time. I can't say enough about leadership and about being able to, as a leader of your organization, demonstrating and providing the leadership that is needed. And it comes from not only leading the right way and being there, but also communicating what your expectations are as a team. Businesses can thrive in opportunity in adversity. It's going to take some all-in attitudes, but really demonstrate some outstanding leadership. I've got a list of things also to share in the upcoming weeks of bad leadership. When we can laugh about some of the things that people are doing, we'll do so. Remember now than ever, cash is king. There's my contact information. I know there's lots of questions out there. I'm going to jump on to the questions right now and answer as many as we can in this period of time. So, first question, has anyone seen the criteria from the Department of Labor for small business exemptions? I think that people have. I have not seen so, but that's an important, maybe good reference to go to, is to go to the U.S. Department of Labor, and I'm sure they have a lot of resources up. The great thing is there are a lot of different resources, and keep looking. Department of Labor would be another good one. How do employers cope with trying to keep employees when they can go on unemployment and collect the extra $600? Well, that is one of the things that it's going to be kind of out of your control, I think, at this time. You can demand them, I think, to come back, but in most instances, if they're a valued employee, you're going to want to really kind of respect their decision-making in this process. And that is going to make life tough. How you can make them return to work, if you so elect to, that is something that we really need to look into. And maybe we'll address that another time. On the EIDL application, must all owners enter ownership info, or only those that hold a greater than 20% stake? And Tim, the correct answer at least was, you have to have a 20% or greater stake. And I still believe that that is, even with the streamlined information, the streamlined account that came online this week, I believe that is still true, if I recall from the process that I went through. So if you have a 20% or greater stake, you're going to have to provide a little bit of contact information. So it could be as many as 5 individuals from one entity. Also, there's a question on, can agricultural farms apply for the PPP? They aren't able to participate in the EIDL loans. That is true. The SBA disaster loans do preclude procurement, or actually production agriculture. So this is one of the things that'll come out in the final regulations. And it's also, I would keep looking for USDA to have some programs to assist farmers with the great need for food and other resources. I cannot imagine that farmers would be left out in this process. Okay, let's see. I'm attending to see how I qualify. I know that people are struggling to find out. So hopefully we have a better idea of that now, and also continue to look at some of the things that are showing up as far as final regulations on Friday. That's going to really, really, really help us. Bill asked, are there any updates on nonprofits? As I have several nonprofits on this call. Yes, I think actually nonprofits are eligible. They're definitely eligible under EIDL. It's going to be in the final regulations. I think I've read that, but nonprofits, if I'm a nonprofit, I'm looking at some of the information that's out there preliminarily disclosed, but I'm pretty sure nonprofits are available as well. Okay, so looking at some of the other things, here's a good question. Do we need to be open to pay the employees for the 8 weeks? And, you know, I don't believe that that's going to be a condition. Again, that will be in the final regulations, but I really think the spirit behind this law is to keep your employees and to keep them paid. If you continue to have your employees work for you, then they're not on unemployment. And also what it's doing is it's actually front-loaded in the economy for all of us to spring back once we get past this horrible crisis. So pay the employees for 8 weeks. I do not believe you will have to be open, but again, please consult the final regulations. A question on how to calculate the payroll. The average of last year or the last 2 months, if you were in business in 2019, it's going to be your average monthly payroll. And again, that is taking your entire annual payroll, in my estimation, and then dividing that by 12. So on my example that I gave earlier, I'll repeat, $240,000 is your annual payroll for the year. That equates out to $20,000 a month. Sure, some months might have been higher than others, but $20,000 a month. And then you actually apply 2.5 times that amount. If you weren't in business or seasonal, there's different rules that apply. Do you have any guidance that opened in March and had to close immediately after? That's, you know, Evelyn, the only thing I see so far is a February 15th date. And, you know, hopefully there's going to be something that comes along. I'm hoping that that's not really one of the kind of quirks of this particular system. But the date that everybody's working with right now, at least preliminarily, it might be changing on Friday, is February 15th. Okay. Is the credit score of owners considered in the PPP? It's a good question. And actually, under the original EIDL application, credit score was an issue and was a factor. And I believe that it was somewhere in the 650 to 680 range. I think that has changed now potentially for EIDL if they're looking at going back because of the new legislation, put more funds into the program. No, on PP&P, 3P, no, credit score is not, repeat, is not a actual criteria. Holly asked, can you get both the PPP loan and the EIDL loan? And again, the final regulations, if I'm giving you an answer right now, if I'm betting, I would say yes. One of them is a short-term loan for 2 years, and one of them is a longer-term loan. And again, the PPP is basically just for 60 days implementation and pay back 2 years. whereas the idle loan can be for 30 years. So my understanding on this is that, yes, you're going to be able to apply for both. You're going to be able to get funding out of both. Whether they get merged into one or what happens later on down the road is going to be seen. You will not be able to use the expenses for both, though. So if you're paying employees for 2 months under the PPP, and let's say that's all your PPP is doing, then your idle loan is going to be for other uses and paying other things that are not actually applicable under that ground. So no double dipping, but I think that you'll be able to do both. The next question is for corporations, C and S. So a C corporation and a subchapter S corporation that typically has 35 or fewer shareholders. Are shareholder employees included in this payroll loan? My understanding, and again, this is the details will be out soon, is that it's the entity that's going to be taking out the loan. So if the corporation is taking out the loan, even if you're a single member LLC and the only person there, or if you're a 100% shareholder of that corporation and you're paying yourself, then yes. And I think that there'll be provisions also for others as well, for sole proprietors and potentially for self-employed and independent contractors as we come down the road. But again, those are going to be a little bit more dicey. So we'll see actually what comes out of that. I pay my payroll taxes monthly. Can the PPP contribute to that? Daryl, good question. Again, you guys are chock full of good questions. I got tons of them here. My understanding, and again, we'll know more Friday, is that payroll taxes can be deferred throughout this year. I believe that's a provision of the CARES Act. Again, just in legislation since Friday. So I think that can, but I do not think you're going to be able to actually use the payroll taxes as a particular grant. But really more on that later. That's just my best guess as of today, Wednesday at 1:02 p.m. in the afternoon. So PPP will include independent contractors. You just can't file until 4/10. Be interesting to see those regulations. What if you pay one of your employees through a temporary agency? And really that is going to be a really interesting question that comes up, is because many businesses do outsource their payroll function through another business. So it is going to be interesting to see how that works. Wished I had a better answer, but maybe we'll know more on Friday and be talking about this next Wednesday or sooner. Here it says I mentioned that you cannot pay an employee less than they were making before, but can you pay them more? I believe you can. I believe you can pay them more. I think it's going to be reasonable, but maybe that'll be in the final regulations as well, because I'm sure the intent isn't going to be to pay your employee that you're paying $12 an hour, all of a sudden $25 an hour. And then after those 2 months, reduce that back down. So there'd be a provision in there, but there might be an opportunity to give an employee a small bump within reason. Okay, some more questions. How long will payroll be forgiven? It's going to be a 60-day period, and the 60-day period is going to begin on the origination of the loan. So if you get yours in on the 3rd and it comes back next week, you know, I think that's very optimistic, but let's just use that for an example. If it comes back next week, yeah, sure. And you sign and your loan is officially originated on, let's say, April the 15th of all days, then that starts the window for that 60-day payroll period. And so that would run through June 15th. So 8-week period, I use 60 days, pretty much the same. So that is true there. A question here. Bearden, you're looking, okay, come on. Bearden, you're looking really scruffy, really? Okay, yes, I am, and I do not plan on getting a haircut until after this disaster. So it's going to look worse if my appearance appalls you. I only have my appearance on there because people came to me and they said, you know, with all this isolation, you should actually leave your picture up there. So anyway, thank you. I now see who that's from, and there will be retaliation coming soon. I will do a better job of screening these questions as I scroll down. If a business is partially operating, but some employees are being paid emergency sick, can the PPP loan be applied? That's a great question. And I don't have an answer for you. So if it's coming out of the Family Leave Act or some other program, well, that's something I'd really like one of our HR people to look at. And really, it's going to be another thing that with the final regulations when they come down. But remember, we do have family leave from both the state and the federal resources from federal governments. And so, so that's a great question. And Ann, I hope to have a better answer for you next week. As we're running long, I'm sorry, we usually don't run long. We try to get off at our normal time, but we're going to stick around because a number of you apparently want to stick around. So, are college students who have been working and not filed tax returns eligible to receive the stimulus payment? And John, my apologies, but that is going to be a big no as it sits right now. If that gets changed, yes, but that is kind of one of the areas of which we've talked about today, where there will be glitches, there will be problems, and there will be actual issues that actually come up, fair or not fair. Most of them unfair, that will preclude under present law. Now, will there be some fixes that go in? And actually, will there be some fixes that are required by the legislature and the president? Potentially, and maybe these will get fixed in subsequent stimulus packages and programs if there are any. Remember, this is number 3. We've had 3 stimulus packages already. And whereas I think it's the intent to get number 3 out there and to get it working, and then to see where the issues and problems are, they're going to come up getting anything out in this short of a period of time. But college students and my interns at the CSU Bakersfield, apologies. If you don't file a tax return, then you're not going to be eligible to receive the $1,200 stimulus payment. People are asking if I can send them the Excel cash flow sheet. Yes. Do that, put that on the survey or some other means. There'll be a survey that launches at the conclusion. Maybe there was 2 last time, but do put it on the survey, and we'll do every means get that to you as soon as possible. Couple of other things. People are asking about a copy of the webinar. The webinar is being recorded, and as it was the first 2 in this series of 3, it is available to be viewed through the Zoom platform. All you need is a link, and we can supply that link. You chambers of commerce and others that are out there that really would like to share this with a broader audience, that is available as well. So we're going to try to share this to all, and to as many people as we can moving forward. So yes, it will be available for those that want to watch it also. Let's see. Would a business with a tax debt lien be able to apply for these loans? You know, that is a good question. And traditionally with SBA funding, SBA financing, that is a big red flag. And there are other areas to where they will actually kick you out. There's been a big thing with debarred individuals that are either disbarred from a legal bar or some other organization or channel. And in the past, there have been issues with individuals who have not paid back their student loans and other federally sourced debt. Those are the 2 more common ones. Now with payroll taxes that are in arrears, you know, I tried to answer this question last week. I don't have a definitive answer. If I had this issue, I'm hoping that actually that they will be available. I think that there's a good chance the PPP will, because it's going to be basically granted to keep your employees going. And there's really no value in singling you out or not allowing you because that you have fallen behind on payroll taxes or other types of debts or liens. So, you know, I would imagine that there could be an operation or a situation to where, no, it is not, it cannot be used to repay those, but I think that there's a good chance that that'll happen. Hopefully we'll have more clarity on that particular issue on Friday. Okay, getting through some more of these. I'm a business owner with one employee. Can I receive income from the PPP, or is it only for the employee? That is going to be interesting how it comes out. I'm going to assume it's going to be the employee, but again, that comes down to another one of those kind of situations that are not fair, because what you have is you have somebody who could be a limited liability company, single member potentially, and actually it's the entity that's applying and they're paid out of the entity and they can be paid. So more clarity will come on this and more details, and the details are promised on Friday. As you can tell by your questions, there's a lot to consider and there's a lot to actually see what is actually out there, and you know, the problems and the consequences that it's going to have with its final regulations. So when we have the final regulations, we should know more. Are all local lenders participating in the PPP? You know, it's my hope that that all do. My guess is that some will not. Lenders got their first look yesterday at the terms and the conditions of the program. You know, it's my sincere hope that that all lenders, you know, especially all existing SBA lenders, take the high road and go that route and actually do the program. There's a common better good than not doing these. So my hope is that they all do. My guess is that all will not. There are some institutions that are not currently SBA lenders. They have to go through a process still to apply to the FDIC to actually be able to do these type of deals. I think it's going to be a quick process. So I think you're going to see other banks in the community that have not been SBA lenders historically step up and do this particular program. You know, from my standpoint, if I'm a lender, you know, if I'm the Bank of Kelly, glad I'm not, you know, I'm looking at it from a lot of different aspects. I'm looking at it from a staffing point of view, which there's really not a surplus of SBA loan people out there. So it's going to be a challenge to administer. But from my other standpoint, if I have business customers at my bank, I don't see why I wouldn't do this as a retention issue. If my customers are going to go to some other bank and get their particular PPP loans, then there's a good chance that those can actually end up going to those banks long term. So hopefully all banks do participate. Again, some might take a little bit longer to get into the program because they have to go through an authorization program or authorization process to become an SBA lender. And I'm going to cut this off at 1:15. That's only one more minute. Last question is going to be, is the approval based on business finance information or personal credit? And if you look at the 3P, it's going to be based mostly on your employees and the employees that you have. And then it's going to use a very relaxed 7A lending criteria. So if you've ever applied for an SBA loan, their guaranteed loan, their bellwether product is called the 7A. And that program actually, you know, can actually, you know, be a little bit hard to get at times. So this is a neat process that's going to be much easier than that. So we'll see when all the guidelines come out. I'm sorry I couldn't get to all your questions today. We will try to get to some in. If you want to via email, I can't guarantee you that I'm going to have the capability and the bandwidth to answer them all, but we'll do our best. Give us information on your survey, what you're going to want as far as information down the road. What are you going to, do you want a mini webinar on how to try to decide between the two of these? We're going to cover that next Wednesday. There's going to be more resources available. We did 3 webinars last week on various subjects. You might have seen the one that we did on telecommuting, on remote workers. So there's going to be more resources, and we're going to try to increase this bandwidth and try to keep the energy going to provide as much information to you. It's time to sign off. It's 1:15. Thank you for joining us. Be safe, people. Please be safe. It's been a pleasure. I'm sorry I didn't get to the chat box. That was only questions that were in the Q&A. But being a one-man office, that's what we get. So I'm Kelly Bearden, Director of the CSUB Small Business Development Center. We're in Bakersfield. If you want help, go to your SBDCs, Google SBDC, and locally your SBDC consultant can help you. It's the best advice I can give you right now. Thank you for listening, and we'll see you next week. Bye-bye.